I thought it would be also important for everyone to realize kind of where markets are, capital markets are right now. And sometimes we put up everybody's stock. But basically, S&P 500, which is driven by about 10 stocks these days.
And it's about to become worthless, right? With,
No.
Like the valuation of it in SpaceX is...
It's at all-time highs. We're right near all-time highs in the stock market. Have we had a few pullback days? Yes. But let's not forget that that is a major competitor of ours from an asset class and investment perspective. But it doesn't have to be, right? If you've got clients that you know have stock investments and you think now could be the top, or you ask them a great question if they think now is the top, or do you understand why the market keeps going up every day? Or what do you think is going to happen when SpaceX goes public at $2 trillion valuation and followed by Anthropic and OpenAI? What's going to happen to all these prices? If they say, I don't know, I think we're ready for a crash, that's when you say, maybe it's a good time to take that house money, all the money you made, let's sell and let's get you into hard assets. Because real estate is not. Real estate it protects you against inflation. It's not inflation sensitive. It's actually your hedge against inflation. So let's keep that in our minds while we get into some of this data.
Okay. Let me change some of this here. So the first one is GDP, fairly boring here, right? And so we're seeing normal growth this year, 0.5 the first quarter, 1.6 the next quarter. And so we're tracking fine. We certainly don't ever want to see that negative. We rarely see it as high as we have in the last couple of years. All right, unemployment rate, also a good boring number. Where we really get concerned is where we saw some of those bumps like in November. But as we're in a good place. If we saw unemployment go up, that's where I would start getting really recession nauseous.
Okay, you use the word good, which I don't necessarily agree with when we're talking about economic data. We had a very strong number on Friday on unemployment, meaning that the unemployment number is lower than expected. The unemployment number is better than expected. And what happened? The market went down. Why did the market go down? The stock market goes down.
Because expectations of interest rate, yeah.
Because that means the economy is strong, and the Fed should be looking at raising rates, not cutting rates. And I put a post on Friday showing that the bond market is now pricing in rates going up this year, not.
And so where I posted,
which is a big surprise
yeah,
to a lot of people. And definitely, I mean, if people in this room are groaning and kind of shocked, just think your clients are definitely surprised.
Well, and it was a shock to me because the new Fed chair, right, that we thought was going to be a little bit more subject to the administration's, right, policies, and for the whole all the analytical arm to still say we think there's going to be another increase in interest rates wasn't what I would have expected. Yeah.
No, I don't think it's what the executive is going to demand either.
All right, so this is this is the worst slide. And then there's actually another column that came out this morning at 4.2 for our inflation rate. And so that's the bad news.
So there you go. So jobs are hot and inflation's rising a lot. A lot.
We've said this 1,000 times, your goal is 2%. Now they said maybe it's 2.5%. Warren Buffett loves to say 0% is like the goal, should be the goal. And so...
Did you say it was 4.2?
Yes. 4.2 is what came out this morning.
So it's above the top of this chart.
Yeah, this was created last night.
Inflation is what causes revolution in societies. I'm not kidding.
Yeah.
When you work two jobs and you still are hungry, that's when people riot and go nuts. And doesn't necessarily happen at 4.2, but if you keep having inflationary numbers like this come out, that's when you start looking at major voter preference changes. And I'm not saying this for any political reason. I think to push an agenda, I'm saying this when you're just trying to look at what are the tea leaves of, is the Senate going to go, stay Republican or go Democrat or whatever? Inflation is where the current people in power lose control of the situation.
And so, and we don't have multiple slides on this, but like for us to say inflation's this, it's really broken into energy and then like consumer, right? Like consumer goods. And so we're certainly even higher on the energy, and that's your gas pump. And this is why there's all sorts of bills and measures out there. I think like military is supposed to get cheaper gas, and that way, you know, we're happy.
Good for you.
Yeah, and just all sorts of like craziness to bring down energy because that's your public perception and where your gut is. Yeah. And we're doing so much to try to strong arm our way out of like the Strait of Hormuz mess in order for inflation not to continue at its level or increase because we can't get the 20% of the oil we need to out of that region, right?
Right.
Question, Jeffrey.
Go ahead.
So you said inflation is the hedge against the real estate. So we would
It's a
see
hedge against inflation.
right. So we would see real estate prices rise because of inflation's rising. Is that
So that sounds very logical. The issue is if inflation goes up too much and who's buying and their ability to buy in cash, their ability to get lending, like it depends where we are in the cycle. Like if you think back to 2008, 2009, tough times to sell people buying. The only buyers out there that could get a loan were people who didn't need a loan.
I was going to say,
remember?
Yeah, cash.
Right? Rich people got loans very, very cheaply because the banks were like, hey, we only want to lend to you. And you're like, I don't need it. So then it took time for the cycle to work through. The strong people stay in the market. Banks get a little more comfortable with the situation, and they start lending again. You
Yeah.
don't want a shock like that.
You know, if we did a poll with you all, like who's, you know, worked with a cash, you know, anything in cash in this room, I mean, everyone's hand would go up, right? We are actually overly indexed on cash buyers in New Orleans and the rest of the country, which is in some ways great news because we tend to be less bound by like the technicalities of lending. It's just still perceptions of market, which is the stock market and like appreciation and you know, every metric we talk about.
Bottom line, it's going to hurt the lower end price range as well.
Right. We're going to exacerbate the K-shape.
Yeah.
We're definitely pushing down on prices with all the
Yeah.
inflation and stuff.
Yeah. I think this pain point is so painful that we're going to move heaven and earth to bring it down. I mean, I think this would be administration's number one priority, right?
Talking about like that with all the cash and the cash buyers we have here. Yesterday I was in conversation with one of our agents. They lost out on, you know, kind of two deals in the two deals in the 2 million that went over asking in competition, and now they're trying to get another one. They're in their third offer on a over 2 million asking price, and they're hoping.
Well, there's some like there's some good programs, and maybe you know we need to go back to them. It's been a few months, but I mean there are cash programs that essentially will cost a fee to put in a full all cash offer.
Yeah.
And so if that's really their pain point, which it's going to be at your $1 million+ properties, it's something you should consider if you really, really, really want a property, which typically at that price point, you're willing to pay the fee.
We're living in two different markets. Million a quarter and up. Yep. Okay. That's great. Million down. Struggling. It's basically two complete different data sets.
Yep. Okay.
And this is across like every sector of the economy. This is not New Orleans. This is not unique.
All right, so you all know this. I think every once in a while it's kind of good just to look at the yo-yo of mortgage rates. You know, over here we were feeling pretty damn good, and this is whenever we started war with Iran, right? And so this is, you can see where we're kind of building up from here. And so that's what I would have my eyes on to see what happens there to figure out confidence in interest rates. Amongst other indicators, but
yeah,
the rest, everything else is fairly flat. I mean, unemployment is fairly flat. I mean, GDP is fairly flat, so, or where you want it to be.
I just don't like the higher high. I wish we never busted through that prior level. We're getting there, we're getting there. Ho, 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 don't front run our presentation.
Yeah. Here you go.
Next slide.
Here you go, Ken. Yeah, so I think this is great news. So when I first pulled it, I just pulled a year. And if you just looked right here, you'd be like, oh my gosh, we're in the best ever market ever, right? I got like so excited. I'm like, well, this has to be bullshit, right? Because I've lived through it, right? And so you zoom out and you see where we were at the height of it. And that's why we still have this kind of disparity of like, we should all feel really good right now, but we haven't returned to like anywhere what historically was normal. We're still on track to sell, 4.2 million homes in the country when we could be selling a whole nother
It's like
million. of them,
4.
right?
That's what we've been selling for about close to 4 million homes a year.
Well, just the last 2 years, right? Before that, we're talking 5+
Right.
million. I mean, so that's a
We
significant
borrowed from the
20%
future.
difference.
Yeah. Look, I brought up, Ken and I were texting Saturday morning. If you were looking at LinkedIn or some social media posts from Friday, half of NOAA lending is now like gone to different. They got acquired, and I actually was taught.
Oh, wait, I'm coming.
They got acquired. They got acquired by a Florida company from Fidelity Bank. Fidelity did not get acquired. They sold off NOAA lending to a Florida-based bank. I've been waiting for this. It took. This is how slow and scared mortgage people are. They waited like 3 months to hear how bad the list of terribles were going to be coming down at them before they did anything. And then all the top people like Joey and Ryan are gone, and a lot of senior loan officers are gone.
Or it was just a lack of offerings. I heard it was a lack of offerings more than
Well,
a list of terrible.
this is, I mean, this
You can tell whatever story.
mergers and
That's what I heard. James is still there, the only guy who stayed.
we're gonna
Perhaps the most tentative one.
we'll get to Compass here in a second, but like when we talk about mergers and acquisitions, it is purposely painful, right? Because if you don't create efficiency, which efficiency is certainly less service, you know, like that the deal doesn't make sense. And so anytime you see M&A, you really got to wonder, like, how are they going to do this? Usually it's close down offices, get rid of staff, say we're going to have more unified support, and it gets rough.
What's the word they use? Okay, so when a company buys another, they talk about the number that they're paying for the company, and then they say in like the next sentence another phrase about how many hundreds of millions of dollars or tens of millions of dollars of not efficiencies, but synergies they're going to have.
Yeah.
And synergy is Latin for firing people and closing down offices.
Yeah.
Thank you. One person got my joke.
But it was because there's too much waste.
All right.
Well, because they can't justify the first number if they don't go fire a bunch of people and make it less expensive. Otherwise, the numbers don't work. They would have paid too much.
Okay.
Always overestimate the synergy.
All right, let's roll into local data. We've seen this before, right? Red line is your entire MLS. Blue line is Orleans Parish, okay? So I guess before we jump into this one, this is what it would look like if we did it monthly, right? Which is a roller coaster. And so this is where you got to be careful pulling your data, because this doesn't help you with a story to tell your client, right? And so sometimes when you see, and our NOAA.com is really great about it, and be like, we're up whatever, since last month, and we're down this much since last month. Well, who cares? I mean, like,
They
who
quote
cares?
some clown from no more.
Yeah, and they talked about that big jump,
Yeah.
that big decline, and this is how terrible our market is, right? So this is where I think it's more interesting, is if we take a rolling 12 months, right? And so we look precisely back at an average of where it was a year ago, entire MLS up 2.2 versus Orleans, which was up 5.6. 5.6, it should be celebrated, right? Appreciation should be
I would argue
3 to
Do you
4%.
think it's that $1 million house?
it's because that's what's moving.
Yeah, that's right.
And we have that inventory, and there's just not that many places in Plaquemine that has that.
But if you look, JP Morgan was saying 4% nationwide. And so the fact we're outpacing the country is not the national headlines that your clients are reading, right? You got to show them this data. This is the best slide of the deck for you.
Why, Cody?
We have a lot pending, right? This is
There's a lot under contract right now.
right.
Holly, do you feel like there's a lot under contract right now?
Y'all are busy people.
Yeah. So lead versus lag, right? I don't know if this is a perfect lead measure, but this is certainly showing the next couple months or next month at least.
Some people are gonna get
Next
paid.
month. Yeah, there's still business to be had. The fact like the entire MLS is on a trajectory for like 7%, we're up 2% monthly, and you see the month where you like keep building on each other is very, very positive.
And that's late in the
That's all
season.
units, correct? Just
What's that?
Units, you're saying units.
This is all units, yep. All right, closed number of cells,
Higher high, baby.
really similar to the pending. We're closing them as
Are you including multifamily,
this
condo,
is
and single family,
this is
everything?
this is everything.
Okay.
Yep.
Because my number.
Yeah, here's I think I've said this before.
Multi-family, 4 units. I mean, come on, that's basically.
I would be very cautious to ever take holistically what we put up here as the truth for your particular situation, because we're neighborhood, micro markets, neighborhood very specific, property type specific, and this is wave tops. All right.
Everything.
This is a crazy chart we have today.
This is monthly, right? And so if we rolled this would look a little bit flat, but I kept it monthly because I think we've actually felt this, right? We've felt this cliff. We're talking like 60 to 30 here, days on market. Now, will that continue? Will that stay? Again, if we rolled this out, it wouldn't look so dramatic, but it feels real right now. Month supply. This is what matters more than like days on market. You got to think it's the math. It's the math of like not only what we have, but what is the demand against it.
So here you go, just a reminder. 6 months and kind of the area around it, balanced market. And the more you get closer to zero, the more of a seller's market it is. And the more you go out the other direction, the more of a buyer's market it is.
Well, we were past
Fold it
12.
up, baby. Fold up the tent and go get a job.
We were almost. I mean,
Investors.
Yeah.
No, it's overpriced.
Wait.
But you know what I'm tired of seeing is so many things selling in 2, 3, and 4 days, and it's so underpriced. I mean,
Yeah.
you're not doing your sellers justice, and you're selling, and then you're hurting the comps.
Honestly, that should be the least, that should be what we should all be independently posting. saying,
Well, hold on. Wait, let's challenge Lori, though. Let's not just take that as gospel. So give us, are you talking about commercial? Or are you talking about residential?
I'm talking about residential.
And how long was it on the market?
2 days, 4 days, 5 days, 0 days, minus 3 days. Figure that one out.
Could it be priced properly?
No.
No.
It's not.
So I think we're capturing 2 different problems here.
Okay.
I think the first problem is, and we've talked about it a bunch, is private listings are not the best thing for the client. Okay? You're capturing that on one hand.
generally.
That's when it's the very few days. Then you get into these high day situations where it goes for a very low price, and you're like, wait a minute, if they would have just lowered that price, we probably would have taken it. The problem is sellers are stubborn, then they get in a jam, and then they start putting the pressure on us. And what do? We start calling anyone that'll take and we go for any bid. And the bid that's in front of us is the bid we go and we take to them. But
Lori,
they chose that.
Lori, the way that I think about this is, there's a quagmire here where there is a lot of this private listing shenanigans going on that I don't necessarily agree with, but it hits the market, right? And you only have like a day to do it. I think in the book Shift, there's a whole chapter on like sense of urgency, right? If you're working with somebody, maybe that's your way of like pushing home the point. Hey, this just hit the market. We need to go look at it now, and we need to put an offer in now.
Yeah, go back to your days on the market.
Yeah. Yeah, our days on market just fell off the cliff. Like we don't necessarily have time to act on something that's good. This is the conversation we had during COVID, and it was a wonderful conversation. Everyone was super excited about it. It's like, oh, how?
Because prices were going up.
Yeah. Well, your prices are still going up. So your month supply going down is good news here. This is like against what we were most afraid of, and that was the U-Haul leaving town, right? It seems like there's a demand again, and the demand seemed to have been dwindling before this, and this is a good indicator like we're going to be okay. 100%. 100%.
All the glory.
Yep. This just means you're getting paid more, right? Which is great. So if you're working in Orleans, 9% more volume, that's 9% more GCI, right? Mm-hmm. Full correlation. It's a lot of money. A lot of money. You're having more showings per listing. That you should feel good.
We've needed that.
All right, we're gonna just a couple slides on like our brokerage performance versus our competition. There's some really good news in this. So if you look at Orleans appreciation, we're at 5.6%. We showed you a second ago, right? Forecast is 4%. Our volume growth is like off the charts, right? And so there's a whole mix of reasons. I mean, some of you are all more productive. We have 30 more agents. Like there's a mix of that, but over and all, we're the top performing in growth in the whole metro.
Is this listing volume?
It's total volume,
Wait, say it again.
year to date.
Overall what?
Overall, we're the most productive in growth office in the entire metro.
That's crazy.
Yeah.
That's y'all working.
We'll look at the pro.
Compare apples with apples is all I'm saying. And that's what
Well, but okay.
He was overly.
Okay, we'll get there. I'll show you why that doesn't make sense. Let's come back to that. Remember exactly what you just said, and I'll tell you why it doesn't make any sense.
That number's actually higher.
Oh, here we
than-
go. This is why it doesn't make sense. You think that's true?
GCI 3.1 million?
On average for 142 agents.
No, I don't think that's true at all.
It is true by average, and that's what you just asked for. The reality is we have some of our top teams that are doing like 40+% better than they did year to date last year. Yep. Right? Brittany Piccolo's done 80 million in volume. No, but even Chris Smith, like the people are all of our top people, even Eubank, 240%, 2% up from last year to date.
242.
Yeah.
Yes, not two.
242% up from last year. I mean, like, just rocking it. So this is where averages don't make sense. You do medians and all those things. But it's up in all those categories. Right?
Congratulations
Yeah.
to our support staff and
It's been exhausting. All right, let's look at our competition. This is by office. This should actually say like Keller Williams, New Orleans. So we're number 3 year to date. Rev's numbers are a little funky. So Rev also, I'm tracking that it's also North Shore, a part of that number, and it's really hard to pull that perfect data out. Jeffrey would point out we're actually not 254. This is coming out of Matrix. We know we're like
270.
probably like $80 million off of that, or something, would be my rough number in my head. Well, just things that aren't put inside of MLS. Yep.
Cody's being very fair. Overly fair in these numbers.
Yeah. So a couple points. We're only 8 million behind McHenry, and so I think we're going to pass them here in the next couple months, which will be fun. So we'll be to number 2, and we're number 1 of the national brands. And here's another way to look at it, right? If you combine all their offices in the entire metro, just not New Orleans, this is what they would look like. Guys, before Ladder and Bloom went to Compass, the disparity was significant. And like the fact it's this small is very, very encouraging. So right now, you can see it's like $0.1 billion of volume off, right? $100 million off. That used to be $600 million. All of Keller Williams versus all of Ladder and Bloom, it was big.
So this is for all the offices?
Per brand,
Williams
yep.
offices.
Yep. And when you think about here, I mean, just a little brag on this office versus the other Keller Williams office, if we're up 40 or 39%,
Somebody else must be.
down, and I mean, for us to be flat. I mean, we're carrying certainly the weight here in the brand. Chicago MLS And Zillow, sorry.
Chicago MLS disconnected Zillow. And then Zillow sued.
Yeah.
Okay, and now other MLSs are following suit. This is perhaps one of the weirdest things. So as much as we disagree with Robert Ruffin, it's kind of interesting that he's pushed this issue here. Do not mistake it for saying, well, he is kind of a visionary. No, he's aggravated that Zillow is effectively is rapidly becoming the de facto
national MLS. Yeah.
And he wants to stop that and give him time to catch up and make Compass.com the de facto national MLS. Do not mistake this for anything for all realtors or being selfless. This is a very, very calculated, shrewd move on his part.
I just don't know how, in your right mind, you could think that this is good for the client, is what it comes down to.
That has nothing to do with why. Don't bring them.
All right.
Don't bring them.
Nicole, would you like to opine since you were on the board? No, I'm not against. Nicole was voting on my peers.
No, I just want to add that the way the board is set up, it's, even though myself has an opinion, but when positions are brought to the board, one vote does not matter. Okay, because they've aligned the board so that they can make the decisions that they want. So I'm gonna just put it like that. That's easy?
Yeah. Yeah, go ahead.
The board maybe back in 2016 for a couple of years. It was maybe about 10 years ago. The CEO has changed of no more. And honestly, I think that's a big part of the changes. I've noticed a change since then. The previous, and I'm not saying anything, I want to make it clear that I'm not saying anything negative about the CEO because I really don't know enough about the CEO. But I will say that I have personally seen changes occur that when I was on the board, the previous CEO was so about the membership. Like when you guys just said 6,000 members, everything was focused on membership and the whole. It wasn't like you're saying kind of what's going on now.
Stephanie, that sounds so lovely, but I couldn't disagree anymore. I think Ginger is actually she does not have the firm grip that the CEO had back then. Missy had a grip that was iron, right? Is that a fair statement?
Right.
Anything she wanted, she got through with very little exception.
Absolutely, but I just want to say, in order for change to happen, we need more representation that would allow for some changes.
Your mic's in and out.
Mine?
Yeah.
I got to tell you, the problem is this. These things don't directly put food on the table in front of Iris, Roman, and Quinn. And if you're going to give me 5 hours back a week to do work, where are we going to put it? I'm going to put it in you all directly here. I'm not going to go fight City Hall for 20 years when really, I think Gary Keller kind of proved you can sit on the sidelines, let these people act like whatever they want to act like, and you can still be number one. And despite all their whatever, you can still go beat them handily.
We talked about this.
This is a big deal. This is in some markets. So I don't even know how this would be legal because I know if I decided I was just going to give all of our all New Orleans listing data to NOAA.com, that GSRN would be knocking on our door with a cease and desist immediately. But EXP is allowed to give Google all the listings in select markets and allow it to be searched. So now when you type an address, Google kindly shows you up at the top.
Yeah, and Redfin's done that. This is just something like I'm watching closely to see if there's impact. I think we're setting ourselves up for like what we've done with your websites and everything because how do a lot of people still start when they don't know how to start? It's in Google, so it's worth watching.
And then the mortgage market is just ugly right now. You notice we don't have another mortgage lender here? They're not making a lot of money.
No, they're tight.
They're not making a lot of money. So you're seeing companies try to consolidate. Wholesale Mortgage, who's WM, was trying to consolidate, and Rocket sued to stop them. there is, if you think back to Cody's slide of mortgage originations, remember it was like 5x a few years ago? They were staffed up, they were moving for those margins, not for these micro margins. And honestly, like, I went to a coffee meeting with a nice person who I liked a lot, who I thought would be a great fit for us, who y'all know. And all they did for an hour and a half was tell me all the things I'm doing for them. I was like, could we have a little sales aspect here of like, you know, the office is going to get all this value out of us and, you know, in return we get access to your 141 agents? No, it wasn't like that at all. So the mortgage market is in turmoil. I think they are, I think there's, find the person that you think serves you and your clients best and bring that relationship to the table. That's what I think is most important. That's why I'm not ultra motivated to go find somebody right now. I'm open to it. I just think that this group is seeing the same tumult we're seeing, except they're seeing it worse.
Okay.
Remember, we bring the client the vast majority of the time, right?
Yep.
80% of the time, their client is coming from a realtor, not from a relationship they have to the person that lent the money. And that is a big problem for them. That is a really big problem for them. Look at Zillow. Zillow hurt them a lot. Think of how many mortgage lenders were paying people Zillow lead bills, and then Zillow comes and kills from your agent and puts everybody on flex, which means you don't pay up front, you pay a success fee at the end. You pay a 25 to 30% fee at the end.
I think it's more like 30, 35.
Okay. And then they say you must go get a certain percent of your clients qualified with Zillow Home Loans, or else you're not going to keep getting lead flow. So the lenders save the money of paying for those leads, but now they're not getting them from you.
Oh, wow.
So the whole thing got mixed up. I mean, that's how French Quarter Realty was. Drew Remsen was buying Zillow leads for people for the brokerage, or paying for half the bill. And he sold, I think he was the smartest one in the room. He sold to, who did he sell to? Iberia, First Horizon, and got out of that business. And then Zillow doesn't let you do it anyway anymore.
So Zillow doesn't let you do Premier Agent?
Premier Agent is ending real fast.
Oh, wow.
All right. This isn't as significant for New Orleans commercial real estate market. This is something we've talked about for the last 2 years.
These drivers are not. But
Yeah.
commercial real estate is
Yeah.
really strong right now in New Orleans, only for a wonderful price. Buyers are running the table in the commercial real estate business in New Orleans, except for some industrial.
Yep, and I just think about impact to regional banking and how that affects all deals commercial. A lot of leases up for negotiation at this point, or have been in the last year or two. So,
There's still a lot of buildings you can go buy for the principal amount of debt left on it.
yep,
That it's going to expire in the next
Yep.
year.
good deals to be had. You just got to figure out how to pay
You've
for
got
them.
investors,
You got to get cash.
people-
I think you have to have cash. We talked about that with a couple of deals lately, where it's
Very
like,
high.
it was a great buy, but I'm like, there's no way they're going to get it financed, right? Because the amount they need down, and like the inability for a regional bank to even want to lend on this particular type of asset. So,
Got to come in and stay.
yep.
And then refinance.
This is just your national page. Everyone else is here in flat. Midwest is the highest. No news there, I don't think.